The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. I wanted to start the show today with the gold because we've came down almost $17 from our high. We got down $15 last night. Then we had another $10 rally. If you'll check that gold chart out that I put in since the top was made last Thursday, up at that ABCD level at 1192, we dropped about 20 bucks. Oh, excuse me, we came down $22, not 17. My bad. But we've had two $10 rallies, and they're both very important because the first $10 rally was a 61% retracement of the high. And then the $10 rally that we had today, exactly like the one before, was 382 of the high. And so this is it's very important if you're in gold and silver, because if we can clear that 1180 level, we've got a chance in gold to turn from here. But frankly, I think we're going to be coming down here a little bit lower, and we'll see if it's going to be if it's going to hold that level. We'll have to wait and see. Now, we've had some elections in Canada last night, yesterday, and I guess the Liberals took control by about 42%, thanks to that information from Mr. Z in the room. That moved the Canadian dollar about 70 pips last night. It got up to the 130.40 level, right, just right at the 786, and then it's backed off. So they're digesting that information from the election news last night. There are a couple of things happened last night. I'm not sure whether they're significant or not. 1 second, please. The NASDAQ futures came down and stopped exactly at a 382 of the previous day's low that we'd made down there at 44.12. And they stayed there for an hour. And then the S&P 500 backed off to a 61% retracement of yesterday's low that was down at 2014. We got down to 2019 last night. We stayed there for 2 hours, and then we've rallied back, sitting pretty much where we were before. So this is a real critical level. The Dow Jones Industrial Average has still not violated the 61% retracement of the whole move down. In fact, the futures themselves, the Dow futures, I'll put this in and let you folks take a look at it, because the Dow futures were actually shy of the exact 61% retracement by about 40 Dow points. We made it in the Dow Cash, and that's the one that I use for my calculations. The E-mini Dow, you know, I watch that because a lot of folks trade that. My preference is trading the DAX. The German DAX is by far, I think, the best thing to trade, and followed by the S&P, and then probably the Russell. The NASDAQ would be later in the road there, because it's just too. The NASDAQ is just too herky-jerky. I mean, it hits the numbers pretty good, but boy, there's some swings in there that scared the bejeebies off of anybody. We changed times in the United States here on November the 1st, I was told. Excuse me. And that's good here in Arizona, because that means we have a later wake-up call. Not that that ever makes a whole lot of difference. We're still having divergence in the small cap index, and also the New York Stock Exchange index yesterday was down, just a tad, but it still held that ABCD level at that one. This is, to me, the most important chart of the week from a technical perspective, because if we get above that 140.22 level, we're trading at 103 and change right now. That would tell us, it's because we did go lower than we were on Friday. So if it went higher again, that tells us that this market has not stopped going up, and is still probably going to go a little bit higher. And we're not seeing any indication that the market is turning. We really are not, because last night, the news was relatively poor, with IBM down about $7, 5%, and yet the Dow Jones futures could hardly budge at all. Same thing with the Nasdaq, like I mentioned, it only made a 382 retracement of the low yesterday, and the S&P made a 0.618. So there's no one afraid. And to prove that to yourself, all you have to do is to look at the VIX index, and the VIX index is telling you that the risk is on, because the risk is off, because nobody thinks this market's going to go anywhere but up or sideways. That's basically what they're saying, because we did make new lows below $15 yesterday, and so that's another reason to say that there's something going to happen here pretty quick to change everybody's mind. But what it's going to be, I'm not quite sure. But it does look, it's a little too quiet up in here at this level, given all the things. Now, we've got the Fed boys are out there, and girls are out there today, talking up their game. And they have every reason to raise rates now. I mean, my goodness, they got the stock market up. There's no fear in the market. That would be an ideal time to look at it. And my guess is, the way the markets are acting, I would think that the market would give us some more volatility, but there's no one afraid. So I would assume that a increase in rates would be assumed to be bullish by the people that are in the know. That's my guess. Just because the market is up here and it's not breaking, and if the increase comes, and I'm not sure whether it's going to or not, but that's how I would view it. The whole key to me is this New York Stock Exchange Index. Where we are. The S&P still has that ABCD up there at 2040 to 2045, and the Nasdaq took out at last night's high by one tick, then broke about 20 points. But that 20 points in the Nasdaq is a blink of an eye, so that wasn't very much. Hold on one second, please. Have a little bit of an allergy here in the desert. Okay, we've got a couple of charts that I think deserve our attention. They're a couple of the really big ones. The first one we're going to look at here is the Treasury notes. We have come down. We're almost down to the 786 retracement of the high 6 days ago. What's interesting is the Treasury bonds, which is the preferred, speculative vehicle of what we look at. Those are making a 61% retracement. I'm not sure. I haven't been able to check out the prices yet this morning, or since I've been on the air here. But the number in the bonds was at 157.09, and that's the one that. Just give me 1 second if I can find it. Oh dear, give me a second here. Oh dear, I got too many things here to tell you today, and I can't find them all. So what am I gonna do? Well, it's the same one. Well, I'll have to find it during the break and bring it up. I know I've got it here. The question is where. I've got about 40 things on my desktop to talk about. And, guess what? The old cowboy found it. There it is. Yeah, it just takes a little while. These old eyes aren't what they used to, but they still get by. Okay, we're looking here at at 157.10 is that 61% retracement. It's also a hold on 1 second. It's also a 1.27 expansion of the range of yesterday. So that should be some pretty good support so far. Where 09 has been the low. 19 has been the high, but it's still, really, really early. But that could be an indicator. This is really, if you'll look at if you're new to these markets, well, even if you're not new, if you're new to these markets, one thing to do is to study this bond chart on an hourly basis or half hour, and then study the gold chart. Even though they're totally different things, they're showing the same similarities. After the top was made, the market makes a 61% retracement, and then it breaks down, and then it rallies back to another 61% retracement. and then goes down to the next 61% retracement. This is how I learned how to, to find these numbers to give me some idea of where I think the direction is. And believe me, it's a swag, and everybody knows what that is, a sophisticated, wild guess. And but it's a calculated guess, and it gives you a place, to watch where the support and resistance should come in, on some of these things. So that's what we're watching right now. I still can't stress enough the importance of that New York Stock Exchange Index ABCD swing at 10,422. That is a perfect ABCD. At the same time, the Dow made the exact 61% retracement at 17,222. We closed at a little above that yesterday, but that was, market on close, or when they're marking prices up on the close, and the futures didn't even budge, and they didn't anywhere make that number, and they still missed the number on the upside yet. I mean, it's still early, but they could still do it. We're into this rally now from August 24th, almost 2 months. This is what's happened before during these bull markets, and that have turned to bear markets. And I think this is what we have going on right now, that whenever this rally is finally over, today, tomorrow, next week, next month, I'm not sure when it's going to be, but when it does start down, I believe that we're going to see lows below those August 24th lows, and we'll see it. There's just the complacency is here because of the VIX index. There should be more a little fear in the market, and there is none. I mean, it's basically all systems go, and do whatever you want. The other thing that I've done over these past couple of days here, since returning home, was to start to look at the Dow stocks, because they're all price weighted. And when you look at some of these stocks, they're making major patterns. I mean, big time patterns. It should scare the heck out of you if you're a long-term investor, because most of the stocks have already topped. We've seen that from the breadth. But if we take just a quick look at one of these, which is one of the big favorites lately, is McDonald's. And as you can see, McDonald's has completed that 1, 2, 3, 4, 5 expanding triangle pattern, and we did go up, and we hit the spot on 1.27 number yesterday in McDonald's. We also hit it in Nike, and Disney made a perfect 61% retracement of the whole move down at 109.72. The high was 109.92. Closed at 109.40, I believe. So all of these are fitting in, but that doesn't mean they're going to hold, because all it takes is a little bit of a push, and these could go a lot higher. Okay, we'll take a little break here, and we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service, Fibonacci 24/7, is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. news. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to have a little discussion here about fear in the markets. Because if you remember from Mark Douglas's book, the four greatest fears a trader has is the fear of being wrong, the fear of losing money, the fear of missing out, and also the fear of leaving money on the table. You should type those and put them in front of your machine, because that's really what really operates. Now, fear is basically, if you use the acronym for fear, F-E-A-R. I got this from Tony Robbins. I've been doing stuff with him since 1986. And fear means false evidence appearing real. They've done many studies about fear, and they know that 95% of all of our fears, are never realized. Some people have, tremendous fears, like acrophobia and claustrophobia and all these other things. It's really an amazing thing, because when you go back and think of it, how the mind plays tricks with you. I have an interesting story to tell you it was about 9 months ago. We were visiting our grandkids. They were 3 and 1 at the time, and the 3-year-old was having a real difficult time at sleep at night because of the shadows in the room. And he had this monster in his mind called the Dickory Dock, and he was in nursery rhymes, with the elephant going up the clock, and that, to learning to tell time and stuff. So the Dickory Dock was the monster, and I told him, I said, you can get rid of that monster. Very simple. All you have to do is, when the monster comes out, you go, magic dust, baloney, and it will disappear. And about 2 hours later, it was time for bed, and he came running in. And he said, "It worked. It worked." He said, "It's no longer there." And I said, "Well, if it ever comes back, just do that." And it came back one or two other times. He did the same thing. And here he's 3 years old, and I'm certainly not a psychologist. I just know that the shadow was most probably not a monster of any kind. But anyway, it's just your mind can play tremendous tricks with you. And the other thing that the mind does is the fact that of our expectations. This is the thing that's really difficult, because all your frustrations in life, and this is also from the Tony Robbins material, and I recommend, if you haven't done anything with Anthony Robbins, you really should, because he does neuro-linguistic programming, and he's very, very good at it, and it'll help you, I'm sure of that. But the other thing that it does is that you have to remember that all of your frustrations in life come from unfulfilled expectations. It doesn't make any difference whether it's from your physician, your doctor, your spouse, your child, the market, whatever it happens to be. That's one of the things that you want to remember, that if you don't expect, then you don't want to be you won't have too much things. And this is one of my biggest problems, because I work at this really hard, and I'm relatively good at it. But when I expect something to happen that it doesn't, it does bother me for a little bit, but I have to shake it off. But if you're not expecting anything and only react to it, that's the real beauty of what you can be doing here. We're going to be opening here pretty soon. We've got a little bit of downward pressure early this morning, but not much. Not much not much happening right now. We're still holding up in some of these things, and still a little bit. It's very, very early in the game, so you really can't do very much. The bonds are still down at this level here, 0911. The notes could still go down to the 786, so you could easily watch that to see what's going to happen and see what's going on. So we'll just wait and see how the market handles all the early morning buying, which usually will come in when you have a lower opening. They're expecting IBM to open about $7 lower, and that would be below the 786. And I would be surprised if it, in fact, did that. I imagine it will be like Goldman Sachs. People that want to buy IBM, like Mr. Buffett, who has a large position in it, will get a chance to buy it cheaper this morning, and that's what they like. And so watch those retracement levels in IBM on the way down. I believe 144 is the 618, and 145 is the 618, 143 is the 786. My expectations, it will fall somewhere in that ballpark. If it happens to fall totally out of bed, that'll be a different thing altogether, because after this rally, that could be it, because IBM has been in a really long-term downtrend, and this last rally was very would be very, they're saying that the opening, Tom's telling me that the opening is going to be around 142.22, and that's going to be below the 786, so that's going to be a relatively negative thing for the market to handle. So, but there's other stocks, of course, that are going to probably do a little bit better than that. Okay, we're going to take a little break here, and after we have words of these from our sponsor, we'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to update gold here a little bit. After we hit that 1177 level, which was that $10 rally equal to the last rally, we backed off exactly to the 61% retracement of yesterday's low at 1171. We've now rallied almost $7 back, and if we get back above that 1177 again, we could probably have some legs in this, but it's going to take some a little bit of power to do that. But I did want to bring that to your attention. Now, the next chart that I wanted to talk about is the euro, because we have been in a pretty significant downtrend in the euro for the past many weeks. We've been in an uptrend since March, but yesterday we had a big break. Actually, it was between Friday and Monday. We had a big break from that 115 level, and then last night, what happened was the euro had an 80 pip rally that took out the previous day's high by only 2 pips and stayed there for about a half an hour. I mean, there was absolutely no buying there at all. It was setting at a 786 retracement of a previous swing. And so if you're trading Forex and you're watching something like that, it's a very good low risk opportunity, because when prices take out previous highs and previous lows and don't move very much, that's telling you the market certainly wants to move in another direction. So I just want to bring that to your attention, because I think the euro is still headed lower, and we'll see if we're going to have much of a reaction to it at all from that high at 1113.90. There'll be a great deal of resistance at 1114.20, I would believe, because that would be a 61% retracement of the whole move over the last couple of days. We'll have to wait and see. Now, we've got a potential going in the grain markets. We're reaching some major support here in wheat, corn, and beans. The $64 question is, are they going to have enough oomph to get out of here? So I'm just waiting a day or two to see if they're going to, make it out of here. They've rallied 4 or 5 cents off the major numbers that we looked at, but they haven't really done very much. Now, in the British pound, I believe the same thing is happening in the British pound that we have going on in the euro. I believe we're still in a downtrend, and you ought to try to find a place to get short this pound around this 155 level, because I believe we're still heading lower, and we'll see what's going to be happening. There's been some discussion about the debt ceiling, folks. That debt ceiling, I don't think that's a ceiling. I think that's just a sky, because the sky's the limit. Every time they get to the thing, they just raise the limit. That we just keep borrowing money from our grandkids, to live off of, and that's what quantitative easing actually is. And we'll see what happens. But our debts are so high. History says it's going to end very, very badly, but history is made to be rewritten, and maybe this is one of those times, that we're looking at. If we take a look at this British pound chart, you can see that we've been in a downtrend since June. We've had several ABCD corrections, actually 3 of them. The last one we had up at the 155 level was a perfect ABCD. We're still right in that zone, so I would think that we're getting ready to head down for another leg down that should take us down into the 149 level. 150 and change is the 61% retracement of the whole move. So we'll watch that as near as we can. The Treasury bonds and Treasury notes are still holding that level. We made a lower low in the. Excuse me, 1 second, folks. We made a lower low in the bonds by just 2 ticks, and it still held that number of 09, which is, I think, an important spot to look at. We'll watch that very quickly. Market's a little bit weaker this morning. We've got the Dow down about 40 or so, the S&P down 7, and the NASDAQ down about 20. Whether that's going to mean anything on the long term of things, I'm not sure. But all I know is that New York Stock Exchange Index chart with that ABCD could be the Achilles heel of the bulls, because in Gartley's book, he spent 2 full pages describing that ABCD pattern, and said that it was the best pattern for getting into the right side of the market, because once a bear market is started, if you'll sell that first ABCD correction, you'll see that we have a chance to get in, because you have equal moves. He didn't do anything with Fibonacci. He didn't know that. His book was published in 1937, and Charles Collins didn't start. He was the man who helped promote Ralph Elliott back in 1938, and they didn't start that till around 1938. And Elliott did not use the square roots of the numbers, the square root of 618 and the square root of 1.618, which I think are very important, because 786 and 127 describe many, many swings. So he knew 382 and 618, and it was a great thing that he brought out. And but that's only part of what the things are happening. That's why Fibonacci gets a bad rap, is because people really don't understand it. They think it's a standalone trading tool, and it's not. You have to use other things, and the main one being some common sense, because you've got to be able to protect your losses as best you can, and then you'll be be off a lot better. So we want to watch that also. Okay, we have a little weakness in the morning this morning. The IBM is quite weak. It's broken way below the 786 level, and if we get it much below 141, IBM is going to look pretty nasty, especially with that big gap down. We're having some really strange earnings things. You would think that Harley Davidson would be doing good, and someone asked me what common sense is. 1 second, please. That's when all the currencies are using the same coinage. That's what that means. That's when you try to think of what should be done and then do it the right way. Okay. We have a question about the Apple, and Apple has been basically acting not very bullish, in my opinion. Had these very, very narrow ranges over these past 6 or 7 days, and when the rest of the market's screaming up, Apple has certainly been a laggard in the market. It's had one heck of a move. So we'll see what's going on. And I noticed that Harley Davidson is down 10% today, so that's a pretty big hit, down 5. So another buying opportunity, I would guess. Hold on 1 second, please. Someone's asked a question here. One of the main things about the gold that is troublesome from a really long-term, or from a longer-term perspective, is the fact that XAU, the gold-silver index, looks extremely, someone just Skyped me something. Oh dear! When you try to do two things at once here, it really gets a little difficult. So we'll do one thing at a time if we can. All right, let's move on to the oil market. We'll take a look here, because I think oil is it's also approaching the moment of truth here. We had some really strong support at the 46 level. We had a $1.50 rally, and then the market came right back down and is now testing the old support down around 45, and we break below 45, folks, this is going to be a pretty negative picture, the way I'm looking at it. So we'll see what's going to happen, and then we'll see if that's going to occur. That's the bottom line. Would someone be so kind as to give me the last price on gold, please? So I can, someone can tell me, because I cannot pull my prices up at the same time. We're doing it. Oh, good. It's taken out. Good. Gold has now exceeded the $10 rally, so that means we could make a $17 rally on this without too much trouble. So that's good. The low was 61% retracement of yesterday's low. So the way you figure that out, it rallied $10. Okay. Then you just add $10 onto that low that was made there, and that gives you an ABCD pattern to come in right at 1181, 1182. And that's what you'd want to be watching. Gold is still, I still think gold is bearish, even though I was long gold today, and I'm not in it right now. But the main thing is that these rallies are going to be really interesting to see if it's going to do it. But if we take off in gold above 1200, boy, you cannot be short that, because that will take out all of the resistance that I see, on the longer term charts. That would be equivalent to silver getting above $17 an ounce. That's the bottom line of what we're watching. So we'll see what's happening. With quantitative easing the way it is, folks, the people have or these corporations that many of these guys, well, most of these corporations get paid on stock options. So the higher the price, the more money they make. So they just borrow money to buy back the stock. That's basically what they're doing. And this, it's not illegal, but that's what happens. So what can you do? That's all you can do. So we'll see. All right, we just almost hit that 1181 in the gold. So watch that very, very closely here, because that's a let me see how much that's 12. That's a $13 rally off of the low, and there's a nice ABCD there If you're an ABCD trader, you want to be looking to sell gold at around 1181. And of course, you don't have to risk more than about $4 on that. So we'll see see how that ends up. Silver is still lagging. I believe silver got back above $16 an ounce, someone said, but we'll have to see. It's still acting very, very weak compared to gold. Not really very, very weak. Believe me, it didn't back off very, very much. So we'll see what happens. Hold on one second, please. See, silver didn't even get above $16 on this last rally. That's another thing that's telling you that there's something, there's something going on, but we'll have to wait and see on some of these things. So there's not really much else you can really do but to wait and see how they're going to unfold. Watch the crude oil very closely, folks, because if we go below that 45.50 per barrel, there shouldn't be very much there to protect it, other than to breaking below the old lows at 43 and change, and then we'll see what it has going for it, from that thing. Now, this could be the same type of day that we had last Thursday, where the market started off weak, and at the end of the day, it took off like a rocket. So these markets can react very, very quickly. So try to protect yourself the best you can, and then you'll be at a lot better shape of doing this. Now, I'm going to show you the breadth index, because it's still looking a lot better than it was before, which it should, given the fact that the markets had the biggest rally in 4 years during these last few weeks, and we're still, the new highs to new lows is still acting rather poorly. So that's the bottom line of what we're looking at. Okay, wanted to do something here. All right, okay, one other question before what was the last price in gold again, please, before I move on to the next thing I wanted to cover, which is the banking index. Okay, see, we're at 1181. Okay, let's take a look at the banking index here. If we take a look at this, you'll see that the banking index has taken out those lows of what do you call it? Shucks. The August lows, and then we took it out in October, and then we've rallied back, and the rally has been actually quite pathetic. And we've had a couple of bad earnings reports that were not viewed as bad. One was with Citicorp, and the other one was with IBM. So even though the market shows things, it makes it look that it moves around a little bit to see what's going to happen. And we'll be watching that also as we move along. We noticed that the gold did get right up to that ABCD pattern. Didn't quite make 1181. It got to 1180.40, so it missed it by about 60 cents. Silver got to 1596, I'm seeing, so that's telling us that we had a little bit of a bounce. We did, the important thing from the stock index futures point of view is we did stop at that major support in the S&P at 2019. That was a 61% retracement on the market. And then also the same thing with the NASDAQ. It also held at major support. So there's nothing here to scare anybody on the bullish side, because the market's held pretty good support. The only negative that's really out there is how bad IBM looked, and that could change intraday, sometime without any trouble. So we'll wait and see. The important thing is this New York Stock Exchange Index, folks, that ABCD pattern. That's what I think is important.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we are experiencing a little bit of a rally here, which we certainly were expecting. We hit the perfect retracement again in the S&P down at 2019. The NASDAQ made a perfect ABCD pattern from last night's action down at 44.34. So as long as those levels hold, this market certainly looks like it has legs to go higher. And not only that, but the bonds are telling you we're now below the 61% retracement by about 5 pips. So that's telling us we're most probably heading down another 25 pips to the 786 level, and the notes are getting very, very close to the 786, but we haven't hit that as of yet. So it's still real early in the day, and it's kind of hard to make any type of assessment of what's going on. The euro did make that slightly higher high than yesterday by just a little bit and didn't go anywhere, and now it's backed off about 45 pips from its high. So all of those are telling us that we're probably over some type of a critical day in here. The question is how to how to take advantage of it, and I think the best way is to keep an eye on these bonds, because if they totally fail here, that means that these folks have risk off, and they can buy whatever they want because there's no skin in the game. The key here is the New York Stock Exchange Index, folks, at 10,422, and the Dow at 17,224. Those were the 61% retracements of these moves. So keep an eye on those. Those are the things that I think technically are important. I don't know diddly squat about the fundamental part. Don't want to know. I just need to know whether people are buying or selling, and right now they're buying. So we'll see what happens after the end of this first hour and a half or so in the market. But if we go above 10,420 in the New York Stock Exchange Index today, we could go, substantially higher into the end of the month, because we don't really have a really strong Bradley date until the end of the month. There's a couple of smaller ones in there. Of course, we have the new moon coming up. The full moon coming up. But that's it. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.